You are welcome to my presentation on IAS 12, income taxes. In this presentation, I want to explain how to determine the tax base of liabilities and how to compute the deferred taxation. Tax base of liabilities and the computation of deferred taxation. I've told you that deferred tax earlier. I've told you earlier that deferred tax is the tax attributable to the temporary difference. I said is the tax attributable to temporary differences. I've told you that temporary differences arises where an expenses is allowable in the computation of taxable profit and for accounting purpose, but in different period. An expenses is allowable as deduction in the statement of profit or loss and for the computation of taxable profit, but the period in which they are allowable or used differs. So that is temporary difference. Temporary difference, I've told you that is the difference between the carrying amount and the tax base. I've told you that the carrying amount is the amount at which an elements are recognized. So the carrying amount of liability is the amount at which liability can be recognized in the financial statement or in the statement of financial position. The amount at which liability are recognized in the statement of financial position is said to be the carrying amount of the liability. Tax base, I've told you that the amount attributed to an item for tax purpose. Therefore, the tax base of liability is the amount attributed or attributable to liabilities for tax purpose. I want you to take note of this. Note. Tax base of liability is the carrying amount. Tax base of liability. Liability is the carrying amount. The carrying amount of liability less the amount that will be deducted for tax purpose. Amount that will be deducted for tax purpose in the future period. Less the amount that will be deducted for tax purpose in relation to the liability. In relation to the liability in the future period. So, take note of that. In the future period, I didn't say that have been deducted. I said the amount. That means you have to take the carrying amount of the liability, you now less the amount that will be deducted. Amount that will be deducted in relation to that liability in the future period. So that will give you the tax base of the liability. The carrying amount of the liability less the amount that will be deducted in the future period in relation to the liability. That is step 1 or procedure 1. 2, for revenue received in advance. Number 2, for revenue received in advance. If it is revenue received in advance, the tax base of such revenue, tax base of the revenue of the resulting liability, tax base of the resulting liability is the carrying amount. The carrying amount of the liability less the carrying amount of the liability less revenue that will be deducted in the future period. That will not be deducted. Less revenue that will not be deducted. That will not be deducted in the future period. Less revenue that will not be deducted in the future period. If it is revenue received in advance, the tax base of such liability will be the carrying amount of the liability less revenue that will not be deducted in the future period. So that is for that. So I want to consider the procedures for identifying the tax base of liability. Procedures for identifying the tax base of liabilities. Procedures for identifying the tax base of liability. Number one, identify the carrying amount. Carrying amount of the liability. The first step is to identify the carrying amount of the liability. 2, identify the amount of liability that will be included in tax computation in the future period. Identify the liability that will be included in the tax computation in the future period. Step 3. You identify the amount that will be included in the tax computation in the future period. The first step is to identify the carrying amount. The second step is to identify the amount that will be included in the tax computation in the future period. Step 3, deduct the carrying amount. The carrying amount identified in step 1. Deduct the carrying amount identified in step 1 from the amount that will be deducted. Deduct the amount. Deduct the amount that will be deducted. The amount that will be deducted in tax computation in the future period. That is what the result you arrive at here. Deduct it from the carrying amount. From the carrying amount. That is, step 2, you identify the amount that will be included in the tax computation in the future. That is step 2. Step 1, you have identified the carrying amount of the liability. So deduct what you arrive at in step 2. That is the amount that will be included in the computation of tax in the future. Deduct it from the carrying amount. What you arrive at is the tax base. That will give you the tax base of the liability. Number 4. For revenue received in advance. Number 4. For revenue received in advance. For revenue received in advance, the tax base will be will be its carrying amount, less the amount that will not be taxable in the future period. Less the amount that will not, take note of this, that will not be taxable in the future period. That is the procedures for identifying the tax base of liability. The first step is to identify the carrying amount of the liability. The second step is to identify the liability that will be included in the tax computation in the future. Then step 3 is to deduct the amount that will be included in the tax computation in the future from the carrying amount. So that will give you the tax base. But if it is revenue received in advance, for revenue received in advance, the tax base will be the carrying amount less the amount that will not be taxable in the future period. So that is the procedures. These are the procedures for identifying the tax base of liabilities. So we want to take question as work example. Example: identify the carrying amount and the tax base of each of the following liabilities. Number 1, current liabilities include accrued expenses of $1,000. This is deductible for tax on cash paid basis. 2, accrued expenses have a carrying amount of $15,000. The related expenses have been deducted for tax purposes. 3, current liabilities include accrued fines and penalties with a carrying amount of $100. Fines and penalties are not deductible for tax purposes. Number 4, loan payable has a carrying amount of $100,000. The repayment of the loan will have no tax consequences. Number 5, current liabilities include interest revenue received in advance with carrying amount of $10,000. The related interest revenue was taxed on a cash basis. Solution. Number 1, solution. The first item is current liabilities, which include accrued expenses. So the first item is accrued expenses. Accrued expenses. You were told that current liabilities include accrued expenses of $1,000. Current liabilities include accrued expenses of $1,000. This is deductible for tax on a cash paid basis. So that means the carrying amount of the accrued expenses, carrying amount of the accrued expenses will be the $1,000. What will be the tax base of the accrued expenses? Tax base. Remember, I've told you that the tax base of liability, I said, is the carrying amount less the amount that will be deducted for tax purpose in relation to the liability in the future period. So the carrying amount, the tax base now will be carrying amount which is $1,000. Then you now identify how much of the liabilities will be included in the tax computation in the future period. You were told this is deductible for tax on a cash paid basis. On a cash paid basis. That means the liabilities is included in the tax computation on cash basis. That is what that means. Cash basis is used for tax purpose. And remember, this is accrued. It has not been paid, but it will be paid in the future. It is when it is paid that it will be included in the tax computation. That is the meaning of cash paid basis. Remember, I've told you that the tax base of liability is the carrying amount less the amount that will be deducted for tax purpose in relation to the liability in the future period. How much will be deducted in the future? The carrying amount is 1,000. Then in the future, when this 1,000 is paid, then it will be included in the tax computation. That means the 1,000 will be included in the tax computation in the future period. 1,000 minus 1,000, you have is 0. So the tax base of this liability is nil. I repeat. Since the accrued expenses of $1,000, the accrued expenses of $1,000 has not been paid, and is to be included in the tax computation when it is paid, that is on cash basis. It's to be included in tax computation when it is paid. Therefore, $1,000 will still be included in the tax computation in the future when it is paid. Therefore, the tax base will be 1,000 minus 1,000, which is nil. That is for accrued expenses. Two. Number 2, accrued expenses have a carrying amount of 15,000. The related expenses has been deducted for tax purpose. Accrued expenses, that is note 2 as well. Accrued expenses. The carrying amount of these accrued expenses, that is amount recognized in the statement of financial position, and that is 15,000. The tax base, which is B, tax base. I've told you that the tax base of liability is the carrying amount, and the carrying amount is 15,000. Less the amount that will be included in the tax computation in the future period. In the future period. Take note, in the future period. I did not say the amount that has been included. I said the amount that will be included in the tax computation in the future period. See, the related expenses has been deducted for tax purposes. That means no further amount will be deducted for tax in the future period. The related expenses in connection with this liability has been deducted for tax purpose. No further amount will be deducted in the future period for purpose of tax. Remember, I said less the amount that will be deducted for tax purpose in the future period in relation to that liability. So this has been deducted. That means no further amount will be deducted in the future period. And the tax base of liability is the carrying amount less the amount that will be deducted for tax purpose in the future period. The tax base of this liability now will be the carrying amount minus the amount that will be deducted. Since the related expenses has been deducted, no further amount will be deducted in the future. The amount that will be deducted in the future is nil, which is 0. Therefore, the tax base will be 15,000 minus 0, and that will still be $15,000. $15,000. That is for Roman figure 2. Roman figure 3 now. Number 3. The current liabilities include accrued fines and penalties. Include accrued fines and penalties. Current liabilities include accrued fines and penalties with a carrying amount of $100. Fines and penalties are not deductible for tax purpose. You are told fines and penalties are not deductible for tax purpose. So include fines, accrued fines and penalty now. That is note 3. We have accrued fines and penalties, which has been included in the current liabilities. Accrued fines and penalty. So note 3 now, accrued fines and penalties. The carrying amount, how much has been included in the statement of financial position, and that has been given to be carrying amount of $100. So the carrying amount of accrued fines and penalty is $100. So how much will that be the tax base? Tax base. I've told you that tax base now is carrying amount less the amount that will be taxable in the future period. Remember, fines and penalties are permanent difference, and besides, you have even been told that they are not tax deductible. Remember, permanent difference or differences are not tax deductible. That means they will not be deducted for tax purpose. You can't deduct fines and penalties for tax purpose. That is the meaning of not tax deductible, not deductible for tax purpose. Since they cannot be deducted for tax purpose, that means nothing will be deducted in relation to fines and penalties in the future period. That means the amount that will be deducted in relation to fines and penalty for tax purpose in the future period will be 0. Therefore, the tax base will be 100 minus 0, and that will still be $100. Therefore, the tax base of the accrued fines and penalties is $100. $100. So that is for that. Then note 4. Note 4. Note 4. In note 4, you were told that a loan payable has a carrying amount of $100,000. So note 4, that is loan payable. Loan payable. It has a carrying amount. The carrying amount of the loan payable has a carrying amount of $100,000. The carrying amount is $100,000. The repayment of the loan will have no tax consequence. Therefore, what will be the tax base? B. The tax base of the loan. The repayment of the loan. Remember, the tax base of liability is carrying amount, which is 100,000, less the amount that will be deducted in the future for tax purpose. How much will be included in tax computation in the future? So now let's read the questions again. A loan payable has a carrying amount of $100,000. The repayment of the loan will have no tax consequence. That means since the repayment doesn't have any tax consequence, no amount will be deducted for tax purpose in the future. Therefore, the amount that will be deducted for tax purpose in the future in relation to the loan is 0. And if a 0 amount will be deducted, therefore $100,000 minus 0 we still have 100,000. The tax base of the loan payable is $100,000. I repeat, you were told that the repayment of the loan does not have tax consequence. Therefore, no amount will be deducted in the future period in relation to the loan. You were told that the repayment of the loan will have no tax consequences. So therefore, no amount will be deducted in the future period in relation to the loan for tax computation or for tax purpose. Therefore, the tax base is the carrying amount minus, since a zero will be deducted for tax computation minus a zero, so you have the tax base of the loan to be $100,000. Note 5. In note 5, you were told that current liabilities include interest revenue received in advance. Interest revenue received in advance. So that is note 5. Interest revenue received in advance. Interest revenue received in advance. So how much is the carrying amount of that? Carrying amount of interest revenue received in advance, and that is the current liabilities include interest revenue received in advance with carrying amount of $10,000. So the carrying amount is $10,000. How much will now be the tax base? Tax base. Remember, the tax base of revenue received in advance is the carrying amount less the amount that will not be taxable in the future. Less the amount that will not be taxable in the future. That means you have the carrying amount. Carrying amount, which is 10,000, minus the amount that will not be taxed in the future. Let's read the question. So, with carrying amount of 10,000, the related interest revenue was taxed on cash basis. That means the related revenue has been taxed. So, how much will not be taxed in the future? Since the related revenue has been taxed. The related revenue has been taxed. So, the amount that will not be taxed in the future is 10,000 since it has been taxed. That means that 10,000 will not be taxed in the future since it has been taxed. Therefore, the amount that will not be taxed in the future will still be 10,000. You know, the 10,000 has been taxed in the past. It has been taxed in the previous period. The related interest revenue was taxed. That means it has been taxed in the past year. Was, which is past tense, was taxed on cash basis. That means the related interest was taxed when it was received in the previous year. That means since it was taxed then, that means you cannot tax them. Because if you tax them again, that amounts to double taxation. To avoid being taxed twice, to avoid it being taxed twice, that means this 10,000 will not be taxed again. So the amount that will not be taxed in the future will be 10,000. Therefore, 10,000 minus 10,000 will be 0. So the tax base of the interest received in advance is nil. The tax base of the interest received in advance is nil. So I'm going to stop this here. My next presentation, I'm going to solve an advanced questions. The questions which are touch all aspects covered so far. The one question that will involve the current year tax, the deferred tax, which will require the computation of deferred tax, the identification of tax base of asset, tax base of liabilities, and the computation of deferred tax, then the computation of income tax liability for the period. So I'm going to give you a question that will cover all those ones. Thanks.